Yo guys, what's good? What's good? All right, so today I'm gonna be showing you guys everything you need to know about fair value gaps, what fair value gaps are, how you can take advantage of them, how you can frame your trade from fair value gaps, what they really are, and how to use them. Everything in-depth study about fair value gaps. So let's get right into the video. So here we are on chart. So what's the fair value gap now? The fair value gap is that weird how would I call it, weird gap on the market. So I'm going to use something to actually show you. So you can see these candle formations all around. You can see all these candles all clustered, all clustered, all clustered, all clustered. But amongst them, you can see some spaces, okay, between them. So for those of you that are new to fair value gaps, this space in between the previous candle, if this is a candle of reference, this black candle right here, this down close candle, if this is a candle of reference, the candle behind it, wherever it stopped, and the candle after it, wherever it stops, the boundary between them is the fair value gap. The gap on this main candle of reference is what we're talking about. Now look at this carefully. I'm going to mark another one so you can see the identity. Okay, how identical it is with this one. Can you see it? This gap in this candle where this week stopped and where the previous week stopped, and that is where the fair value gap is. Where this, you can see this here also, that's where the fair value gap stopped. So I'm basically doing this video for beginners in the sense that a lot of people don't know how FG works, and in order not to get really confused, you need to stay and understand. Now, the market moves basically higher highs and higher lows. We all know it moves like waves. So this is it: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Right? Good. Now, there are many things that make this market jump every time it comes to a higher low. There's everything that makes it jump when it gets to what? Uh, see, I see the continuation. So, what makes it jump? It could be other blocks, it could be anything. But one of the things that make it jump is fair value gaps. Okay, one of the things that make it jump to create a higher high is fair value gaps. So you go back to your charts, look deeply at these things and study. You will find out that wherever these things occur, the market will trade back into it and drop, as you can see right here. You can also find fair value gaps on bullish candles, okay? Don't get me wrong. It's not only on bearish candles you find it. You can find it on bullish candles like this. You see me draw it here too. Good. Now, look very deep. Look very deep. See where this week stopped. And you see where this previous week stopped. The gap left on this candle, because this is abnormal. That's why it's called an imbalance. And now it's called fair value gaps is imbalance. It's abnormal because every candle covers each other. When this candle form is covered at the back and it's covered in the front. When this candle form, back and front, always like that. So when there is weirdness, is what we call the imbalance or fair value gap. Okay, fair value gap, right? So that's when we call it a fair value gap. So here there's an abnormality. It was not completely covered in front. The front was covered to an extent and stopped, and the back of it was covered just a little and stopped. So that place that is remaining naked is called a fair value gap. So now, when later the market comes retest inside, you see what happens: an explosive move. Okay, so this concept was brought up by ICT himself, Naseko Trader. You can check him on YouTube. So I'll show you areas where this has been used over and over again. As you can see, it's been used here. Price tapped into it and it went up. So this is nothing new in the market. So now I'm going to show you how to use fair value gaps. So the usage of fair value gaps is dicey. I know you learning about this, you go to your charts and look for all fair value gaps on the charts and try to make something of them, or try to create a new trading strategy of them. You're just playing, you're wasting your time, because I did that when I started and it really disturbed me. Okay, like it really affected my trading, because when I learned newly about other blocks, I just jumped right and started looking for other blocks everywhere to work with. and that will destroy your trading. So adding fair value gaps to the way you trade is just an additional confluence. Now, for instance, what you should focus on the higher frame is this. So let's assume the market is doing this, is ranging, and price is now going. You guys know we have point of interest known as buy side liquidity. It's going to be found here, right? Good. So there's a buy side liquidity here, and it has shown you every confirmation, every tendency that this is the next place price is attacking. So what does that mean? It means fair value gaps around here will be used for price to meet that target. As easy as that. So if any fair value gap is formed on the way, now it must not just be fair value gap. It could be other blockable anything. Fair value gap is just one of them. It's just a random, random. It's just a normal POI. Okay, point of interest, and price can seek to enter, retest into it, and then hit the destination where it's headed to. That's the use of it basically. So where do we somebody asked me, where do you see fair value gaps? What time frame do you work with fair value gaps? No, it's in every fucking time frame. It's in daily, weekly, monthly, 4 hours, 3 hours, 2 hours, 1 hour, 45 minutes, 30 minutes, 15, 5, 3, 1, even seconds. It's everywhere. So now this is the best approach that you don't get confused. Whenever you're on the daily chart, when you're analyzing, let's get to the daily chart. Whenever you're on the daily charts and you're analyzing, you want to have reasons for why price will do what it wants to do. So I will give you a fair value gap kind of reason so you can understand what I'm trying to tell you. Okay. All right. So I'm going to use this replay mode here. So now watch carefully. This is the daily chart. And as you can see very carefully, the market has tapped into this fair value gap, this big fair value gap here, and we have another one here. So first of all, fair value gaps found on bullish candles are called BC, buy side imbalance, sell side inefficiency, and fair value gaps found on bearish candles are called CB, sell side imbalance and buy side inefficiency. As easy as that. So these we have two um imbalances here. Which one do you believe? This is the daily chart. We are trying to frame our daily bias right now. So in this scenario, which one are you going to believe? So watch me carefully. I'm going to go to the weekly chart and draw exactly where price is reacting off. So I'm doing that so I can be sure of what I'm expecting, because there are two fair value gaps. Which one is stronger and more dominant right now? So it just showed up that we are in a volume gap. Price did not feel it completely before. This is a volume gap. As you see this abnormality here, from this point to this point is a volume gap. It's different from a fair value gap. This gap you see here where the candle made this gap, okay? So this volume gap was covered before. The work of the volume gap is that it must get covered completely. So it was covered halfway before and price dropped, and this is the next time price is covering it completely. So you're most likely going to see a drop after it. Okay, so even minus that, price was able to run this high, as you can see it beautifully. So there are reasons why price wants to drop than how price wants to go up. More reasons. More reasons for a drop than an up movement. And as you can see, if you watch very carefully, I know it's very tiny, but I'm sure you can see right now. This high was run, buy side liquidity cleared. Very tiny, but as you can see, that was a stop hunt. And price is now dropping. So now we have these fair value gaps. Not all of them does price reacts from. Price decides to cover some of them, and price moves from some of them. Now, if your fair value gap is not in line with the bias or the market order flow, it will get covered. But if it's in line with it, price will tap into it and go higher or lower, depends on the case. So as you can see, this fair value gap here. Now we are going to know how the next day is going to react based on how it reacts off here. If the next candle taps inside here and drop, it means everything in this day we are going to look for on the lower time frame. We're going to look for only bears. We have bearish point of interest like bearish order block, buy side liquidity sweep, and a bearish FVG, which you can call CB. Okay, now these are bearish point of interest. So when we see today that if price enters inside here, there's a high possibility of dropping because of these additional confluences of volume gap on the weekly chart and buy side liquidity run and even a stop count here, then there's more reason to understand that price is most likely going to sink than it's likely going to go up. So we'll observe the lower time frame and see if there are reasons why price would go down and go up. So every bearish point of interest we see would actually take it seriously. So I'm going to replay and see how that day ended. So as you can see, what happened, that day ended like this. Price entered into the fair value gap and dropped. Now, do you know how you would have taken advantage of this? If you went on the 1 hour time frame, to be specific, this is 24th July on a Monday. So let's see the 1 hour charts. So let's see the 1 hour charts. Remember, we have other points of interest like bearish order block, buy side liquidity sweep, and fair value gaps, bearish fair value gaps like CB. You know what I'm trying to talk about. So any of them that appears, we are going to use that to get into a trade. So the next time frame we normally go to use 1 hour because an intraday time frame that helps us see what the market is doing way clearly. Okay, so what we're going to do is that you are going to make sure now this big gray area is the fair value gap on the daily. This is also called what? A buy side liquidity. Now, do you see that to back up what we are looking for during the London session, what did price do? Price went above it beautifully, and you see the drop. So if you're trading in London session, when it went above, that's where you go on the lower time frame to take your sells. As easy as that. Do you see how the top down analysis is simple? But if there was nothing like a buy side sweep or nothing bearish point of interest, you're not going to do anything. So now, when you come during the New York session, New York Q zone, this is where you find another fair value gap called CB, the bearish fair value gap. Can you see how price traded into it? Can you see it? And then the drop follows suit. So we know that it's a bearish order flow, and that's why every bearish bearish fair value gap is working. So what am I just doing? I discovered that today is most likely going to be bearish. I went to the 1 hour time frame and I look for other point of interest to help me. If I meet a bearish fair value gap, I'll use it to drop down. If I meet a buy side liquidity, I'll wait for it to get swept for a drop. So everything bearish that you need to take price to the destination. So it must not be fair value gaps. You must be looking, okay, if there's no fair value gaps, I'll not trade. You make use of all of them. So are you seeing that I just use the daily fair value gap? I just use the 1 hour. And to even get into this trade, into this entry, you need to also wait for a change of character to the downside on the 1 minute and then return to FVG, not order block. FVG for you see. So FVGs are everywhere and can be used. So I hope you found this video helpful. Go back test, study, and you can ask your questions. Peace out, guys.